Welcome everyone to the channel. Despite this being one of the largest Cardano and most intense days in crypto market history, the reality is that it actually wasn't as disastrous as the red candles made it look at first glance. Now don't get me wrong, no one enjoys opening the charts and seeing red everywhere, especially in a market as emotional and fast-moving as crypto. But when we step back, analyze the data, and compare this move to past historical events, what we're seeing right now is something very different, and in many ways, something much more constructive than most people realize. Before we go any further, let me be very clear. This content is for educational and informational purposes only. It is not financial advice. Nothing in this video should be taken as a recommendation to buy, sell, or hold any cryptocurrency or asset. Always do your own research and consult with a qualified professional before making any financial decisions. Now let's break this down properly. Over the past 24 hours, Cardano experienced a tough session. We closed yesterday down roughly 6.5%, and heading into today, we were down another 2%. That's not fun, and there's no sugarcoating that reality. However, earlier this morning, we actually received an announcement that provided a small but noticeable push to the upside, moving ADA up by about 1%. When you zoom out and look at the full 24-hour window, ADA is down approximately 8.5%. And here's the key point. Bitcoin over that same time frame is down around 7%. That means ADA and altcoins as a whole are holding remarkably close to BTC, which is not something you typically see during major downside volatility. Historically, altcoins tend to massively underperform Bitcoin during these kinds of events, but this time, they didn't. What this tells us is that we are sitting on some very thick layers of liquidity. We're in major buy zones. There are large players actively defending price across ADA and the broader crypto market, and that's a very important signal. To really drive this point home, consider this. Over the last 24 hours, the crypto market experienced approximately $1.8 billion in liquidations. Let that sink in. During the COVID crash, liquidations were about $1.2 billion. During the FTX collapse, liquidations hit around $1.66 billion. Even the massive liquidation event in February last year, which at the time was the largest in crypto history, came in at roughly $2.33 billion. On some of those days, ADA dropped 30 to 40%. This time, less than 10%. That's a huge difference. What we're seeing here is increased market maturity and stability. This kind of price behavior is much more consistent with a market that's forming a bottom rather than one that's preparing for a massive capitulation. Now, could we still go lower? Absolutely. That's always possible in crypto. Anyone who tells you otherwise isn't being honest. In terms of levels to watch, the 35-cent range is very important for ADA. Below that, we're looking at the broader structure, with potential downside zones around 28 cents and in a more extreme scenario, between 21.5 and 28 cents. These are key areas where we would expect buyers to step in if additional red hits the market. It's also worth noting that big wipeout days like this are often followed by another volatile session. Sometimes that means more downside, sometimes it means a sharp recovery. We'll have to see whether more liquidations come into the market. But here's something very important that's developing for ADA right now. On the charts, we've set a slightly lower low in price while simultaneously printing a higher low on the RSI. That's bullish divergence. We saw a very similar setup toward the end of last year, and we all remember what happened next. ADA went on a strong run to start the year. On the Bitcoin side, another major technical milestone was achieved. We officially closed the CME gap around 84,820, clearing all nearby local CME gaps. For context, there are still gaps much higher up, around 98K and even near 116K. Historically, Bitcoin tends to revisit these gaps over time, and the fact that the downside gaps are now filled is structurally positive. Now, let's talk about something that many people don't like to hear but need to understand. This move was very clearly coordinated. We saw large Bitfinex whale positions, specifically long positions, being closed just before the downside move began. We've talked many times on this channel about manipulation and coordinated actions by large entities, and this was a textbook example. There wasn't some massive surprise news event. Markets weren't closed during any announcement. This was positioning and leverage being unwound. And it wasn't just crypto. In the same 24-hour window, $4 trillion was wiped from gold and $1.1 trillion was erased from silver. Combined, that's more market cap destruction than the entire crypto market, gone in a single day. That tells you this wasn't an isolated crypto event. This was leverage being flushed across global markets, fueled by excessive speculation and retail FOMO finally hitting a breaking point. Another critical development we've been tracking closely is Bitcoin dominance. Yesterday, BTC dominance actually moved lower, meaning altcoins held up better than Bitcoin during the drop. Even today, despite the red, altcoins are still showing relative strength. That's a very big signal. Does this guarantee an altcoin run? No. But it does increase the probability that on the recovery, altcoins could outperform BTC. This is something we've been discussing for over a month, and now it's finally starting to play out, perhaps a little earlier than expected. That said, we are still seeing heavy short interest across the market. In ADA alone, there's roughly a 13% imbalance toward the short side, and this is fairly consistent across other crypto assets as well. Shorts are aggressively chasing price lower, but with the level of support we're seeing right now, it's entirely possible that this pressure fails, setting the stage for a reversal instead of further downside. Finally, let's not ignore the positive fundamentals that were completely overshadowed by yesterday's volatility. The U.S. Senate reached a spending deal to avoid a government shutdown. Huge. The Senate Agricultural Committee advanced crypto market structure legislation. Also huge. These are exactly the kinds of developments that create a more favorable regulatory environment over the coming months. Keeping the government open helps clear the path for things like spot ETFs and continued progress on crypto legislation. On top of that, we saw another notable announcement this morning. Donald Trump has officially selected Kevin Walsh as the new Federal Reserve Chair. How the market reacts to this will be very interesting, and it's something we'll be watching closely. So yes, the last 24 hours were rough. There's no denying that. But when you strip away the emotion and look at the data, the structure, and the broader context, this move looks far more like a stabilization phase than the beginning of a deeper collapse. If you found value in this breakdown, make sure to like the video, subscribe to the channel, and turn on notifications so you don't miss any future updates. It really helps the channel grow, and I'll keep you updated whenever.